Hello viewers, welcome to the cost accounting learning video. In this video, we will learn about the making of financial statements for manufacturing companies. The company is PT Givari Company, starting from the cost of goods manufactured report to the notes to the financial statements. Let's take a look, shall we? So, we will give you the case example of making the financial report. In here, we are presented with the data, namely the balance sheet table of PT Givari Company as of December 31, 2024. And based on this table, we will create the financial report for the period of December 31, 2024.
So, first thing first that must be prepared by all manufacturing company is the cost of goods manufactured report. Now, for example, it is known that at the end of the period, the remaining raw materials amounted to was 40 million rupiah. From this, we can calculate how much raw material was used to produce the product using the formula beginning inventory plus purchase during the period and subtracted by the ending inventory. By knowing the total raw material use, we can then calculate the total production cost for PT Givari Company. It is known that the labor costs and overhead costs are respectively 45 million and also 30 million. So we can calculate 60 million plus 45 million plus 30 million is 135 million. So we know that 135 million is the total production cost. Let's assume that both the beginning and ending work in progress inventories are the same, 20 million rupiah and 20 million rupiah. So the total production cost plus beginning work in progress subtracted by the ending work in progress equals cost of goods manufactured.
So, the next financial document is the income statement, which provides an overview of the company's profit generating performance over a specific time period.
In 2024, PT Givari Corporation reported total revenue of 200 million rupiah. And we already count the cost of productions, which is 135 million rupiah. Then this amount is subtracted from the total revenue. So the company achieved a gross profit of 65 million rupiah. The next step involves deducting operating expenses, which include 15 million in administrative and general expense, 10 million in selling expenses, and 10 million in depreciations. Altogether, operating expenses totaled 35 million. After accounting for these costs, PT Givari Corporations ended the year with a net profit of 30 million rupiah. And here is the income statement table.
Moving on to the next statement, that is statement of changes in equity. This report highlights how the owner's equity shifted during the period year.
Okay, moving on to the statement of changes in equity. So, the statement of changes in equity report highlights how the owner's equity shifted during the year. PT Givari Corporations began the year with capital totaling 205 million rupiah, which included retaining earnings from prior years. Throughout the year, a net profit of 30 million was added to the equity. However, the owner also withdrew 5 million for personal use. After these changes, the company's equity at the end of the year stood at 230 million. And here is the statement of changes in equity.
Okay, next we will discuss about the balance sheet report for the PT Givari Company for the period December 31, 2024.
In this balance sheet, we only include accounts from the adjusted trial balance that are included in the real account group or accounts whose values are carried over to the next period and recorded in the balance sheet report, namely assets, liabilities, and equity. And then we will ignore the earnings, expenses, and PRIF. So, based on my previous explanation, the current assets section of PT Givari Company from the cash account to finished goods inventory has the same nominal value as the adjusted trial balance. And then, for its fixed assets, the nominal factory equipment is reduced by accumulated depreciation of 20 million. So, the value of the equipment after depreciation is 80 million rupiah. Then, for the liabilities section, the nominal value is the same as the adjusted trial balance, which is 25 million rupiah. And for equity, we take the nominal from the closing equity in the statement of changes in equity that has been discussed previously, which is 230 million rupiah. After that, we add up the nominal on both sides and make sure the nominal is balanced.
Next, we will discuss about the statement of cash flow. From the previous reports, we have gathered several data. We know that the revenue is $200 million, raw material purchase is 60 million, direct labor payment 45 million, overhead cost payment 30 million, administrative expense 50 million, and selling expense is 10 million, and also the withdrawal 5 million. For the operating activities, we can subtract total revenue by all expense paid in cash. Material purchase, direct labor payments, overhead, and etc. So, 200 million subtracted 60 million, subtracted 45 million, subtracted 30 million, subtracted 50 million, and 10 million. It's left with 40 million rupiah. The second one is investing activities, which arise when the company spends or receives an investment funds, and also when the company purchases of long-term fixed assets. But since there is no data in this case, we would like to proceed to the next stage, which is financing activities. And the third one is financing activities, where we can include the withdrawal price as it reduces the capital. Therefore, the amount of cash in the financing activities is minus $5 million. And the final step is to sum all the amount in each activities. In operating activities, there is 40 million, and for the financing activities, there are minus 5 million. So we can subtract that point. Therefore, the increase in cash that occurred in PT Givari Co. is 35 million rupiah.
Next, the last one, let's discuss about the notes to financial statements, or usually in Indonesia, we call it as CHLK.
Usually, notes to the financial statements begin with an explanation of the company's accounting policies, followed by an explanation of specific accounts such as general policies or basis for preparation, depreciation of fixed assets, inventory valuation, and others according to the needs of the company itself, such as explanation of receivables, liabilities, and others. First, in this section, we explain the accounting basis used by the company. PT Givari Company uses GAAP, or Generally Accepted Accounting Principles, which is a set of standards, conventions, and rules used in the accounting to prepare reliable and consistent financial statements. The company follows the accrual basis of accounting, whereby revenue is recognized when earned and expenses are recognized when incurred. Next, in the second section, we explain how the company calculates depreciation of its fixed asset. The company applies the straight line method to estimate the depreciation of factory equipment. With this method, the value of fixed assets will decrease by the same amount each year throughout the useful life of the asset. And in the third section, we explain how the company values inventory. The company uses FIFO, or first in first out method. The meaning of this method is that the goods that are first purchased or produced are the first to be sold or used.
First, our discussion about the financial statements of manufacturing companies in one accounting cycle. We hope this video can help you in understanding how manufacturing companies prepare their financial statements. If you find this video is useful, please do not forget to like, comment, share, and subscribe as a form of support for us. And see you later.